This is going to be one of those good news, bad news days. So let's start with the good news because that's just my general outlook on life. James Dauma enjoyed a drive around Pasadena, California with Bradford Ferguson. You know Bradford, he's of rebellionaire.com, and he's also the co-host of Good News Thursday Night. Well, Bradford is starting a 2-week tour of the United States in a Tesla that's equipped with version 12 of full self-driving. He wants to see just how good it really is. And he's been putting out some videos, and there's no question that version 12 is looking very, very strong. But it's really instructive to hear how James Dauma described his ride. He described it on X.com. It's a key factor in this story is that Elon Musk said that what James Dauma said is accurate. So let's listen. V12 is going to be over 100 times reduction in interventions compared to V11. Over 100 times the interventions, fewer, 100 times fewer. This is not an incremental upgrade. It is a leap forward. He says he wants to thank Rebellionaire for giving him a chance to experience V12 path planning and control. It's impressively better than version 11, and he predicts that most FSD users are going to find the new system to be dramatically less burdensome, less annoying, and less scary to use. The degree to which V12 accurately mimics human driving behaviors is startling, he says, and Tesla's ability to capture the good behaviors without the bad ones is better than he expected for such an early release. Truly impressive, he continues. This is so good, he goes on, that I wonder if the AP team might not shift development approach. Up until now, big improvements have required big changes, but the range of behaviors that are being effectively implemented with the end-to-end path that they're currently using, the planning and control that they're seeing, suggest to him that they can get the rest of the way to better than human solely on top of more and better data and training. He goes on to say, congratulations to Tesla's AP team. Very impressive work. And then Elon noted that the training compute is currently the limiting factor, but that issue is being resolved fast. Well, I think that's pretty darn good news. Obviously, all the negative news you're going to hear this morning would be completely reversed in an instant if FSD became complete or even was perceived to be very close to complete. This is Randy Kirk. Please hit like, subscribe, hit notify, of course, because you got Scott Walter coming up later today. We'll get an update on what's happening in the world of robotics. And then Jeff Lutz will end the day with me. I'm sure one of the things we'll be taking a look at with Jeff will be the Fed Chairman Powell, who will be speaking for Congress today. I will interrupt. I will do some kind of a special episode if necessary, if the chairman says anything that really is going to be significant during the day. Otherwise, we'll just wait until Jeff and I have a chance to go over it. Okay, and then of course we'd love to have you, get some of those Cybertruck bottle openers. That would be great, and then join Patreon. That would be phenomenal. Thank you so much for all your support. It's just fantastic how you supported the channel. All right, we've seen the good news. Let's go ahead and take a look at the not so great news. This is from Investors Business Daily. Morgan Stanley bull Adam Jonas issued an investor note late Tuesday in which he cut his Tesla 2024 earnings projection by 25%, saying that the EV giant could potentially even lose money this year. Meanwhile, Cathie Wood, here's a little good news. Cathie Wood and her ARK Invest funds decided to buy 80,000 more shares of Tesla on Tuesday. The Morgan Stanley analyst cut his Tesla price target to $320. That's not bad. That would be 60, 70% up from here, but maintained an overweight rating on the shares. Jonas also whittled down his Tesla 2024 EPS projection to $1.51. I'm going to have to go back and look at my numbers and see if there's how I could get to $1.51. Now, part of that would be total sales of the sexy automobiles. His previous view was 2004 cents a share with auto gross profit margins excluding regulatory credits. He thinks the auto gross profit margins would sink to 11.4 as he foresees continuing demand issues for EVs as a group. So that would be dropping from around 17, 18% now down to 11.4. Remember, Jeff Lutz and others have talked about the fact that you're going to be seeing drops in cost of goods. So I'm not sure why Morgan Stanley believes that you are going to need continuing drops in margins in order to get the price down to what's necessary to keep the factories going. Anyway, but that's what he's suggesting. EV demand continues to decelerate despite continued price cuts. Fleets are dumping EVs, and strong hybrid momentum is competing for the marginal EV buyer. Now, we talk a lot about marginal buyers on this show. Everything's about what happens in the margins. And what he's suggesting here is that I'm sitting here trying to decide, should I buy a pure EV? Should I buy a hybrid? And the hybrid gets a lot of the benefits of the savings in gas and whatnot. Again, this is where advertising would help to point out that you still end up with two drivetrains in a hybrid, meaning two drivetrains that have to be maintained, that can go wrong, that are going to cost extra. So anyway, he believes that potentially EVs in general and Tesla specifically will have to continuously drop their price in order now to compete with hybrids. That's the theory I think that he's talking about. If there was ever a time for Tesla to potentially post a gap, even a loss in the auto business, he didn't say overall, he said in the auto business, it may be this year. Now, the bulk of Jonas's 320 valuation of Tesla stock includes $68 for the core auto business. Remember, out of that 320, what was it, 320? Let me double check. Out of his 320, which he dropped from 345, $68 of that is the core auto business. So he's not giving a huge amount for the core auto business. 61 per share for Tesla Mobility, $39 per share for Tesla as a third-party supplier, and $38 a share for the energy business. What about the services business? What about the supercharger stations? What about the truck business that's coming? Anyway, and what about the robots? Anyway, okay, he says it may be an investment year for Tesla. Wall Street expects Tesla earnings per share of just $3.06 right now in 2024, according to FactSet. That would be a little less than a 2% decline over last year's $3.12. Gary Black, managing partner of Future Fund, posted on X Wednesday that Jonas's predictions are consistent with what he heard during a meeting Tuesday with Tesla. Black said Tesla management refused to agree, this is a quote, refused to agree that auto gross margins had bottomed at Q3 at 16.3%, and their verbal cues reinforced Jonas's view that auto gross margins could fall further in 2024. To maintain sales momentum in 2023, Tesla aggressively cut vehicle prices and offered discounts throughout the year. This strategy has continued in 2024. As a result, auto gross margins, which peaked at 30% in a ridiculous year, amid industry chip shortages, have plunged to well below 20%. Black added that Tesla sees 2024 as an investment year. Chief Executive Elon Musk hinted at this during the fourth quarter earnings call. Musk is focused on ensuring the next generation vehicle, energy storage, full self-driving, and other projects are executed as well as possible in 2024. Gary Black continued with this on X this morning. He says Morgan Stanley's Adam Jonas has slashed his price. We know that. He slashed his deliveries to 1,998,000. So just slightly under 2 million, which would be a 10% growth, versus the 2,077,000, which he had previously. He slashed the gross margin, as we just heard, to 11.4 from his previous 13.2 and versus the 17.6 in 2023. He adjusted his EPS down to $1.51 versus $2.04 previously. That's the overall, the counting energy, etc. Free cash flow dropped that to only $100 million versus $1 billion that he had previously been suggesting, and $4.4 billion last year. Then Gary Black goes on to, then we have this. This is Gary Black again, talking about the Baird analyst. Ben Callow cut his first quarter deliveries to 421. He was at 475. Full year EPS to 281, so much stronger than what was the Dan Ives. So this is, people are resetting. I have just given my numbers last weekend. I don't have as much information as these guys do. I don't have the ability to go into those IR meetings, those investor relations meetings, and look people in the eye and get their body language, et cetera, as mentioned here. So I'm continuing to think that Tesla will be able to sell 2.2, 2.3 million cars this year. I'm just having a hard time seeing how it gets lower. One way it can get lower, of course, is a terror attack. And that was what happened yesterday at the Tesla Gigafactory in Berlin. These terrorists said they were specifically targeting Tesla when they did an arson attack on a power station. That resulted in the power being turned off abruptly at the entire plant, and that can be damaging to equipment and whatnot. And this has resulted in Tesla shutting down Berlin for the rest of this week. People are estimating, I'm estimating, obvious to say that that's probably at least 6,000 fewer cars being made this month. The question is whether the demand is strong enough in Europe. There's reports out this morning also that demand is excellent in Europe, but is it good enough where they're going to now really double up their production in Berlin when they go back on next week? Don't know. We'll find out as next week progresses. The limiting factor says that a promotional video last week was correct. Giga Berlin is starting with battery cell production. Andre said in that promotional video that the first subcomponents are being produced there, and those subcomponents then are being shipped to the United States to be used in batteries here. By subcomponents, he says, I'm not sure if Andre was referring to cells as subcomponents of the pack or electrode materials as a subcomponent of the cell. He says, without knowing more details, it's hard to know, but it's positive no matter what. Okay, then let's turn to general economic news market watch this morning. American businesses, this is ADP report, okay? The ADP report, not nearly as important as what's coming on Friday, which is the big one, but ADP said American businesses added 140,000 new jobs in February, according to ADP. A sign that labor might be slackening after a frenzy of hiring last year. Economists had expected 150,000. I had expected even less. But the ADP payroll estimates, it should be kept in mind, is not an accurate predictor of what's going to happen on Friday. It has shown a bigger slowdown in hiring than the government, because the government's numbers last month were nuts. But both surveys do show they're moving in the same direction over time, which is slowing economy. The government on Friday is expected to report 198,000 new jobs were created in February, including government workers, because, as you know, ADP only tracks the private sector. Here's a key detail. ADP said most of the new jobs in February were created in restaurants and hotels, construction firms and transportation, and the financial services sector. Big and medium-sized companies said almost all the hiring, with small business employment barely rising. Employment fell slightly in information, a sector that includes the media. The increase in employment in January was revised down to 107 from 111. So there's that, ADP even revising downward. Workers who stayed in the same job earned a 5.1% increase in pay over the last 12 months in January to January. February to January. That's the lowest level since mid-2021 and reflects a downward trend in the past year. Obviously, 5% would still be above what the Fed wants, but the trend is in the right direction. All right, given all of that, where are things this morning? Last time I checked, that wasn't going to be particularly good news either. Tesla is down another 4 to $176.82. The Dow is up 130, the Nasdaq's up 101, the S&P is up 27, and the rest of the Magnificent Seven are mixed. Although Apple, Google, and Microsoft being down, they're not down much. Meta and NVIDIA are both up extremely strongly. Meta up 10 and NVIDIA up 20. Percentage-wise, we've got Dow Jones is up 0.36%, NASDAQ up 0.64%, S&P up 0.56%, and Tesla down 2% this morning. Will there be a bottom to this? Are we gonna, you couldn't get much, I mean, the news can't get much worse than having a terror attack on your plant and having Dan Ives, a Super Bowl lowering the numbers down to where he's even seeing a potential loss in the automotive side. We've got the Cathie Woods are all up slightly, mostly up slightly. One of the Cathie Woods is down. Actually, quite frankly, the Square and ARK Invest themselves are up quite nicely this morning. So lots of up movements, which would suggest, of course, that the bonds are the rates are coming down this morning. Let's take a look. We have got the 10-year down 3 basis points. Look at the rest of them here. We have got that is being reflected, roughly speaking. Again, the 2-year is down 2 basis points, 10-year down 3. And the really short terms, like the 2-month, basically unchanged for all practical intents and purposes. All right, so that's good news ahead of the Fed speaking today and ahead of the labor numbers coming out this weekend. So in general, right now, headed down. We have got oil this morning up again, $1.58, but still under 80 on Texas Intermediate. We have got Brent is up also about the same, $1.16. Sitting at 83.20, still about less than $4 now, differentiating those. Natural gas basically unchanged this morning. The dollar unchanged this morning. Gold up another 11 at 2,154. Copper up 1% at $3.88. Not really knocking on the $4 door yet. We'll see what happens there. And then we've got Bitcoin up 4,000 this morning at 66,442. So that's pretty strong. Okay, let's see. And so James Powell has already reinforced his position that the Fed is not ready to start cutting. So that is what has started out already this morning as Jerome Powell has begun to talk to Congress. Okay, let's go back and just take one more look over at Tesla. Tesla is still down 2%. The market is generally up. Even Apple and Google are recovering. Even Tesla is recovering a little bit right now. So generally up this morning, and continuing to be solidly up this morning as we look. Okay, so yesterday, Brian White and I took a look at the BYD as a competitor. They're the only other real player right now. Let's face it, nobody else. Hyundai, I keep talking about them as another company that is really doing well. But BYD, Tesla, they're the two biggies. And Brian did a great job of laying it out, not just for China, but also for a potential Mexico plant. So you're going to want to take a look at that. And of course, the card will be right here. And then I've had confirmation now that we will be getting Scott will be on with us later this morning. And of course, Jeff Lutz, as usual, on Wednesday. All right. That is all I got for you right now. It has been great talking to you.